There is a war going on. Not the tariff war that you keep reading about every day, not the Russia Ukraine war, but a war between diamonds, natural diamonds and lab grown diamonds. In 2024, about 52% of the couples in US reported using lab grown diamonds for their engagement rings, which is up 6% from 2023 and about 40% from 2019.
Over a decade ago, during my trip to California, I saw my first lab-grown diamond. The founder had enthusiastically shared his vision, confident that this was the start of revolutions in the jewelry industry.
Hey everyone, welcome to my channel. I am Avni, your host for today. Let's quickly begin. First, let's understand how lab-grown diamonds compare to their natural counterparts. Lab-grown diamonds are chemically, physically, and even optically exactly the same as natural diamonds. So then what is the big difference? The only difference is that they are grown in labs. There are two major techniques to grow lab-grown diamonds. One is high pressure, high temperature or HPHT, and the second is chemical vapor deposition or CVD. Basically, these methods recreate the conditions under which diamonds grow underground in a lab setting. And the end result is a diamond so perfect that you can't differentiate between that and a natural mined diamond with naked eye. In fact, there are specialized machines that analyze the growth patterns and trace elements from the production process to understand the difference between the two. Now, why are the lab-grown diamonds becoming so popular? 3 words: affordable, ethical, and sustainable. They can be approximately 85% cheaper than the natural diamonds. And because they are not mined and created in labs, they do not come with the environmental damage or the labor issues traditionally associated with natural diamonds. So, for an average buyer, that makes it a smarter and a more sustainable choice. To give you a real world example, while I was creating this video, I compared a 1 carat natural diamond from Carat Lane to a 1 carat lab grown diamond from Origin, and the price difference was astounding. The natural diamond was approximately 10 times the price of the lab grown diamond, even with the lab grown diamond being a better clarity grade than the natural one. A VS for lab grown diamond versus a SI for the natural diamond. Let's talk numbers, because the growth in the lab-grown diamond sector has been astounding. Globally, the lab-grown diamond market was valued at $22.79 billion in 2023, and it is projected to reach approximately $74.45 billion by 2032, which is a CAGR of about 14.11%. And it does not stop there. It is further expected to reach $97.85 billion by the end of 2034. In terms of market share, lab-grown diamonds make up about 17.5% of the global diamond jewelry market in 2023, and the number is constantly climbing. The US is leading charge, accounting for a whopping 81% of the global lab-grown diamond jewelry sales in 2023 and 24. Combining the US and India, the market was worth about $14.73 billion in 2023 and is expected to hit $37.41 billion by 2031, which is a CAGR of about 12.7%. Speaking of India, India's lab-grown diamond jewelry market was valued at $0.45 billion in 2023-24 and is expected to grow to $1.2 billion by the end of 2031, expanding at a CAGR of about 14.8%. Lab-grown diamonds make up about 8.4% of India's total diamond jewelry market in 2023, and the share is constantly climbing up. Plus, India isn't just consuming, it is also producing lab-grown diamonds. It is a major producer and exporter. In fact, polished lab-grown diamonds make up about 6.2% of India's natural polished diamond exports. India is currently one of the largest producers of lab-grown diamonds, contributing to about 15% of the global production. It produces almost 3 million lab-grown diamonds annually, and the exports are growing by 60% year on year. Interestingly, India's dominance in this sector is driven majorly by its specialization in CVD technology, which is the primary technology used for high-quality diamond production. The Indian government has also been actively promoting the growth of this industry through various supportive measures to give India a competitive edge, primarily in the areas of manufacturing costs and skilled labor. In the Union Budget 2023, the government recognized the potential of lab grown diamonds and allocated funds for research and development in this area. The most notable investment was the establishment of India Center for Lab Grown Diamonds, or InCent-LGD, which received a funding of about 242.96 crores. This will help foster innovation and strengthen India's position as a leader in the global market. Like any emerging industry, though, the lab grown diamonds market isn't without its challenges. Even though the growth has been impressive, there are a few key areas of concern that could potentially dampen the future trajectory. One of the biggest challenges right now is price volatility and oversupply. The production cost of a lab grown diamond has dramatically come down over the past few years, from about $4,000 in 2016 to just $300 in 2024. While on surface that is great news because it drives down price and makes diamonds more accessible to end consumers, there is a catch. Lower production costs leads to overproduction, and that is what is destabilizing the market. In 2023 itself, the prices for an average lab grown diamond have come down about 65%, primarily due to excess supply. To put that into perspective, back in 2016, an average lab grown diamond was priced 30% less than a natural diamond. That price gap has now widened to 85%, putting significant pressure on profit margins for producers. Another factor that could impact the industry is changing regulations around import and exports of diamonds. Any shift in these policies could lead to changes in supply chains, prices, and how easily diamonds move across borders. Then there is the issue of resale value, or rather the lack of it. Currently, there is no universally accepted grading system for lab grown diamonds, and that creates a lot of uncertainty. In fact, about 50% of potential buyers are unsure about the resale value of lab grown diamonds and think that they don't retain any value after purchase. This hesitancy is especially strong in markets like India, where lab grown diamonds are still considered fake or inferior. Misconceptions like these are hampering wider adoption. There is a company, however, working in the lab grown diamond certification area, IGI. I recently made a video about their Q4 earnings call and business outlook. You should go check that out if you're interested. Education and awareness will play a huge role here as more and more people understand what lab grown diamonds are and aren't. They will be better positioned to make informed buying decisions. And finally, perhaps the most fundamental risk lies in scalability of production for lab grown diamonds. Since these diamonds can be produced in large quantities, there is a real risk of market saturation. This could lead to lab grown diamonds losing the sense of rarity and exclusivity that has traditionally defined natural diamonds and made them desirable in the first place. Despite the hurdles, the future of lab grown diamond industry seems bright and full of investment opportunities. One of the biggest areas to watch out for is vertical integration. Companies that can control the entire value chain, right from growing lab grown diamonds in house to cutting, grading, and selling them, stand to gain major competitive advantage. Owning the entire process ensures consistent quality, better margins, and better brand control. Another promising avenue is technology development. As AI and automation become more sophisticated, there is huge potential in improving both diamond production and grading. This could help in not only driving down costs further, but also addressing a major pain point in the industry, which is a universal grading system. The long term market outlook is undeniably strong, with consumers becoming more open to lab grown diamonds, especially younger buyers who prioritize value and sustainability. The industry is well positioned for continued growth. Experts are forecasting substantial expansion over the next decade, and with the right innovations, this sector could be one of the most compelling investment stories in the luxury goods space. Given all that, we studied a few companies in the lab grown diamond space. Some of them are privately owned, some of them are VC funded, and some are listed. For the listed ones, we listened to their earnings calls and assessed management insights. Let's first talk about one of the standout names in India's lab grown diamond space, Goldiam International. Their Q3 FY25 results have garnered significant attention and for good reason. Goldiam reported consolidated revenue of 288 crores in Q3 FY25, marking a substantial 41% year-on-year growth and an impressive 104% jump sequentially. Even more striking is their profit after tax for the quarter, which stood at 49.8 crores, up 54% year-on-year and 125% quarter-on-quarter. Additionally, their EBITDA reached 70.8 crores with a margin of about 24.6 crores, the highest the company has ever seen, highlighting the profitability of their lab-grown diamond operations. What is driving this remarkable performance? The shift to lab-grown diamond jewelry is the key factor. In Q3, lab-grown diamonds accounted for an astounding 80% of Goldium's export revenue, up from 58% a year ago. This marks a full transformation of their business model. During the earnings call, the management explained that the consumer demand, especially in the US, is increasingly shifting from lab-grown diamonds to natural diamonds, driven by better value and comparable quality. Goldium is executing a well-rounded strategy. They now supply to over 3,000 retail stores, up from 1,500 just 2 years ago. They've launched Origem, their own retail brand, with 3 stores already opened in Mumbai. The company plans to ramp up to about 20 to 25 stores by the end of 2025, aiming to make Origem the largest lab-grown diamond jewelry brand in India. The company's online sales are also gaining traction, accounting for about 28% of their Q3 revenue. During their earnings call, the management also addressed a few key investor concerns, pricing, certifications, and expansions being among others. They noted that LGD prices, especially for stones below 3 carats, have stabilized and no further price declines are expected. This is crucial for maintaining healthy margins. Regarding certifications, initially all LGD jewelry required certification, but as the market matures, some retailers are reducing certification requirements for entry-level pieces. Regarding expansion, besides the US, Goldiam has made initial shipments to Australia and is eyeing the Middle East, but their primary focus remains India and the US. Regarding inventory and working capital, about 74% of their inventory is held on consignment with customers, allowing efficient recycling of unsold pieces. The most notable takeaway from the call was management's confidence in long-term viability of lab-grown diamonds. They see no further downside in prices and are betting on volume growth, especially by upselling larger stones as consumer preferences evolve. For those following the lab-grown diamond market, Goldiam's recent results are a strong indicator that they're not just riding the wave but are actively shaping the lab-grown diamond jewelry market, both in India and globally. Now let's turn our attention to Senco Gold, where the company's promoters, especially Suvankar Sen, MD and CEO, have shared their nuanced perspective on the lab-grown diamond segment. Senco Gold has introduced a new luxury brand, Sense, focused on lab-grown diamonds and other products like perfumes and leather goods. Suvankar Sen emphasized that Sense and Senco's mainline natural diamond business cater to distinct audiences. He remarked, "We do not expect Sense-LGD jewelry to eat into real diamond sales at Senco, and the new brand cater to different audiences. All the products under Sense will be made in India and will contribute to about 3 to 5% of our overall sales in 5 years." Senco sees LGD jewelry as primarily appealing to aspirational buyers who are looking for fashion jewelry rather than traditional wedding pieces. Sen mentioned that lab-grown diamonds are creating their own market, but it will take at least 1 to 2 years for the business to show any meaningful return. While Senco has started opening dedicated stores for LGD in India, Sen acknowledged that the demand for lab-grown diamonds in India remains limited. He noted, "Customers aren't asking for LGDs in our stores. We haven't seen any significant demand." Senco, like many of its peers, views LGDs as fashion jewelry rather than investment-grade products with resale value. Despite a cautious approach, Senco is still investing in the LGD segment. They've committed 20 crores to the Sense brand and expect LGDs to contribute 3 to 5% of their total sales in 5 years. The promoters have also increased their stake in the company, signaling confidence in Senco's broader growth prospects. In summary, Senco Gold promoters view lab-grown diamonds as a promising but nascent market in India. And while they're investing in a new brand for LGDs, they don't expect it to significantly affect their natural diamond business in the near future. Lastly, let's look at Titan's Q3 FY25 earnings call and their stance on lab grown diamonds. During the Q3 earnings call, Titan's management addressed the topic of lab grown diamonds in response to the increasing number of LGD stores, particularly in markets like Borivali, Mumbai, where multiple LGD outlets are located near Tanishq stores. Management acknowledged the growing presence of LGD sellers but clarified that as of now they haven't observed any significant impact on their buyer growth, especially in the sub 1 lakh segment where most LGD players operate. To quote Mr. Ajay Chawla, CEO Jewelry Division, as far as we are concerned, we are seeing fairly good buyer growth contributing in the sub 1 lakh segment, which is where most of the LGD players are playing. So, as of now, we have not yet seen the impact. Titan shared that based on spot checks and customer feedback at Tanishq, Carrot Lane, and Mia stores, there hasn't been notable customer demand for LGDs. In fact, customers are often seeking reassurance that the diamonds they purchase are natural. There are only occasional inquiries about LGDs, which Titan views as a clarifying question rather than a demand shift. Once again, quoting Ajoy Chawla, customers at least have not commented, "Why are you not keeping LGDs?" Many of them continue to say, "I hope your diamonds are all natural, and by any chance, do you have LGD or is it only natural?" There's more clarificatory questions that we are getting. Titan views this situation as part of a portfolio strategy across brands. They are monitoring the situation closely, especially in areas where there is a higher concentration of LGD stores, to track any changes in customer preferences. To wrap up, lab grown diamonds are an exciting and rapidly growing sector, offering a more sustainable, ethical, and cost effective alternative to natural diamonds. And while there are challenges to overcome, especially in terms of price volatility and consumer awareness, the road ahead looks promising. To investors and anybody else who's interested in the future of diamonds, it is clear that the lab grown diamonds as a sector is poised for substantial growth. But whether this growth will mirror the past technological booms, only time will tell. But for now, that's it from me today. Thanks for watching. Do like, share, and subscribe for more such videos. Feel free to drop questions or comments below. See you later.